Everybody's trying to get a handle on the US dollar, where it goes from here. There's a lot of people out there talking their books who are on the wrong side of the trade. I'm going to do what I do best in this video. I'm going to break things down really simple in order to keep you on the right side of the trade. In this video, we're going to figure out where the dollar is going from here and how you could best position yourself so that you have these headwinds at your back. If you're new here, welcome. And if you're not, welcome back. I'm really looking forward to this video right now. Here you're looking at a chart of the DXY. Now this is the US dollar currency index. Now it is true this is heavily weighted towards the euro and then the yen and then pounds, etc., but it is the index that people use to gauge the strength of the US dollar. We're going to go ahead now and jump back over here to where I have some markups on the chart so that I could just give you a little bit of brief history before we move forward. And I'm going to start over here where we were back last year in late 2019, coming into the end of the year. And a lot of people over here when the dollar was trading at 96 were very, very bearish on the dollar. What I love about YouTube and all the live streams that we do and all of the published videos is that there is a public record. Over here, I maintained that we are super bullish the dollar. Not only that this was, at the time, we were seeing this wedge pattern developing, this channel wedge, and this is where we began to position ourselves. We then had the breakout, the retest, another retest, dollar exploded up, right? Same thing as we approached that over here. What happened? Kept everyone on the right side of the trade. Now, this is the important piece that I just want to focus on before we move forward. This is just simply to illustrate that even though I was a dollar bull during all of this period, right? And over here, this is the important piece. Over here, we were in a channel. Throughout this channel, I remained a dollar bull. Very bullish on the dollar, right? And then what happened? We broke down out of this channel. This was a technical break on the charts that was telling me, regardless of my own opinions and or beliefs, I had to become bearish on the dollar, at least in the near term. I have to follow what's on the charts. It's irrelevant what I perceive, whatever my thesis is. I have to follow what's happening on the charts. And if you want to be successful, you have to be able to quickly change your opinion. You have to always be processing both sides of the thesis, especially the one counter to your own, so that you're aware if you are wrong. This game is not so much about being right as it is about be able to admit you're wrong and reposition yourselves. Now over here, when we had this big technical breakdown, I did become very bearish on the dollar against my own instinct because it's what the charts were saying. And we have remained so. We have remained selling all bounces into resistance, taking up positions against the dollar. And here we are right now. Now I want to talk about what's ahead of us and where we are right now. And before I do that, I want to talk about what's happening right here with you and what I see. First thing I see right now is that we maintain under this trend line. We are definitely very, very bearish on the dollar. We're looking to continue to sell resistances, right? What could make me change my mind? Because I'm concerned about where the dollar goes from here. Now, I'm not talking about the long term. I'm not talking about the being a dollar debt-based system and the need for US dollars. We just went through severe dollar shortages earlier this year. It started in September when the repo market broke, right? It started then, and then it accumulated in late February and early March, and then the Fed reacted. The Fed opened up swap lines. Actually, it was the day that the Fed opened up swap lines to central banks across the world. That is the March bottom. That is when the Fed overreacted on purpose. Those lines have been used. Those lines mostly by Japan, mostly by Europe, also by Australia. You're seeing already those are just near-term loans. You could see them already being paid back. Right now, we are not seeing that dollar shortage in the system, and the Fed overreacted on purpose. Outside of an anomaly, which we're always looking out for. I do not see anything that could cause a dollar shortage in the near term, in the intermediate term, right? I think that the Fed overreacted on purpose. So I'm not looking for there to be a dollar shortage causing this flight into dollars. What are we looking at though? We have seen fundamentally, we've seen the US actually go to the printers more so than anyone else. Is it possible that, next someone else is up to bat and that puts a little bit less pressure on the dollar, gets the dollar a little bit? Of course. Of course. Is it possible that we continue to see further dollar weakness as although right now we have some gridlock in Washington, eventually, and we're talking the November election is coming upon us pretty soon. Market's usually looking 6 months out. Is it possible as soon as we do have a winner of the presidential 2020 election that the next thing that comes to the forefront, the narrative starts to change about some infrastructure stimulus and or clean energy initiatives? Of course, we're talking about massive spending coming, and then we're also talking about what the need of the American people, who that $1,200 has ran out a long time ago. We're talking about insolvency risks coming into the market. We're going to see a wave of defaults. Like it or not, the response from the government, the response from the Fed is going to be continued printing, right? Is that going to weaken the dollar? In the years ahead, it's going to be the US that has to print the most money due to the nature of the system. So long term, but listen, by the way, the dollar tends to move in cycles. The dollar tends to move in cycles, about 7-year cycles. So even right now, if we're looking at a huge technical breakdown of the dollar, and we are, is it possible that over the next, we can only go so far out, and the purpose of today is to show you where we're headed in the immediate future. But at the same time, it's important to have this discussion of the overall trajectory of the dollar. I do not believe that the dollar is going. People tend to be very, very divided about whether or not the dollar is going, to 120 or the dollar is going down to 0. I think both sides of those arguments in this particular time are ridiculous, right? The dollar goes through cycles of strength and weakness. We've seen it before, generally speaking, on average, the last about 7 years. Could it be, as the Fed has acted over here, that this has been the start of a new cycle and we do see prolonged weakness in the dollar? Yes. And even if we do, does that mean it's going to be straight down? Absolutely not. Does that mean that we're going down and we're going to see some radical devaluation of the dollar? Not in my view, not whatsoever, right? We're just going to look at what's happening right now. And you could see over here, I pulled up before this chart, are we seeing a bottom in the dollar? Right? Technically, what I'm seeing in the dollar is a really, really strong break of this trend line over here. Follow this trend line over here. I'm going to highlight it for you right now so that you understand, because I have two of them here. Right? I'm talking about this one right now. Right? This was the prime trend line that I drew in here, connecting 1, 2, 3 over here. You could see the spike that happened early in March. This is where it bottomed out at. This is an important trend line. I then cloned it. By cloning it, all that means is I go ahead and I copy the line exactly, and I then move it down over to here, right? Starting at this point over here. Let me show you, right there, right? And then you could see that provided, again, support. This is, we've just broken through. So the prime and the clone trend line, we've just broken through recently. That was a major, major level to lose. You have those that are I'll call them perma dollar bulls, like Brent Johnson of the dollar milkshake theory. He did not believe the dollar this year would go below 95. It did. It was a major breakdown over here. Okay. What happens now, right? We put another leg in down, and right now we're consolidating. Right? This is what by consolidation I'm talking about. Here you go. This was the leg down, and then price now is consolidating. What does it do next? Does it make a leg up or a leg down? That's really what we're looking for over here. I brought up this chart before. This is a Wyckoff accumulation phase over here, and you could see, I want you to really just focus in and visualize this pattern over here. You could see over here this low, followed by this lower low. Okay, this is in phase B, followed over here by the lower low, and then a test, and then a lower high over here. I want you to focus in on this pattern because that's what's developing right now. Now we're about right over here in this patterns formulation, right over here, which means that we're going to see the local high, the resistance line, taken out, a little bit of consolidation, and then if we see an upward momentum, then I would have to say that this pattern is absolutely playing out. We're going to be looking for a retrace of this down move, and we'll look at some levels that we might come into. Now here's that first lower low. Here's the low. Here's the second lower low. You can see price made a lower low over here, and then there's that big lower low, and then the lower high, and then that second lower high. That's exactly where we are right now. Now here's the resistance. Right? So if we are able to break above, consolidate here, and then go above, then we would say, well, this pattern seems to be playing out. What would we be looking for next? Right? What would we be looking for next? Now our base case is that this holds. This is a leg down. We are consolidating. We are looking for the next leg down. I always want to be aware of where we're wrong, the other side of the trade. By the way, before I go any further, if you do pull up my true trend BTC now over here, all right, you could see as we got that technical break. Now I wasn't using the true trend over here. There is a video on the channel, on the playlist on Forex that goes over the true trend indicators, both of them, and explains how to use them very well. As we got this big technical break out of this channel that set me off as a dollar bear near term, you could see what happened. The true trend went negative, and since we've been below. Now, the easiest way to make sure that you stay on the right side of the trade is simply pull up the true trend BTC, the 333 period, and then as long as that's red, you know that you're on the right side of that trade. When that turns green, you could then get a little bit cautious that we're seeing a trend change. Now, we are going to look at what's happening technically on the charts. That's where I make my living. That's what we're going to look at. I'm going to go over to the 3-day just to give you that better perspective. You can see right now after that leg down and consolidating, we are consolidating. If you look over here to the left, let's look if there's any support that we are really concerned about. You could see over here, this area of support, follow my mouse line right now. You could see this area over here, right? And then you could see, let me go ahead and zoom in. Let me zoom in for you. Right where price is right now, I'm looking to see if that's any bit of support, right? And I could see this slight touch over here. I could see this touch over here, right? This over here, it's a light level. That's a light level. I'm not looking for any type of reversal here, or I do not expect any type of reversal. Obviously, by doing this video, I'm looking out for when that might occur. What about down over here? What happens if I zoom out a little bit more, right? Go back to 88.54 in that area, more or less. That's a bigger area, right? Let me go ahead and draw that line in. If that area broke down, if this area of support were to break, then we would be seeing a much more pronounced move on the dollar, much lower, probably even testing somewhere around. We got some nice support in this 81.5 area. We don't need to even consider that right now. We're up here right now. There's also some support over here at 90, call it 90.50 as well. That's a little bit of a lighter support. Maybe as far as 91. If we make another leg down, that will be where we're testing next. Okay, so let me come back down to the 8-hour for you. What I'm looking for is if this reaccumulation pattern plays out and next we see a retrace of the move. What is very common when you see a breakdown over here, right? Here you have the break of the prime trend line, and then you had a break of that secondary clone trend line, is to get that retest of those levels. So it is quite possible that if we break out of this reaccumulation pattern to the upside, that we would then be looking for a retest first over here. Let's call it 95, right? 95 would take us into this first clone resistance trend line, or it could go even higher, right? Depending on when it happened, it could either be taking us into the resistance at 95.78, which would coincide with this trend line here as well. This trend line resistance, it was support, now will be retested as resistance, or even as high as 96.40, depending on when that retest occurred. Because if that retest occurs somewhere in November, we're going to be testing that 96.40 level. Okay, so that's quite possible that this plays out like this. This is why we do our daily updates. This is why we do our live streams, because we're looking at what's happening in the markets to keep ourselves on the right side of the trade. It is nice right now to be able to take this deeper dive into the dollar, to give that perspective that we are in ever since we broke out of this channel in a downtrend. And by the way, here's a nice look at it. Here's the breakdown, and then what? Retest of the trend line. Extend that out, right? Doesn't have to be perfect. Here, that was a retest. And then the resumption downwards, that's where we go ahead. That's our trade. That's our trade. So that's what we're looking at right now. The main takeaways that I really want to ingrain in your mind right now is that we're not talking about whether the dollar right now is it's not bull or bear in such a divided camp that it means that the dollar is going to 0 or the dollar is going to 140. Not at all. We saw immense volatility in this period over here into March, into February, and then we saw the consolidation. Then the market showed us its direction, right? Right now, this is technically looking very, very weak on the dollar. I see a lot of people who are really trying to call a bottom in the dollar. It's very difficult. It's very difficult to make a living calling bottoms and tops. We're not trying to get the bottom of a trend. We're not trying to get the top of a trend. We're not trying to get the beginning of a trend. We're not trying to get the end of a trend. We make our living in the sweet spot. We make our living in the sweet spot, and that's what we're looking for, simply to stay on the right side of the trade. Now, is it time to reconsider and say whether or not, okay, well, this move is played out, and from here on the dollar is strengthening? Well, being that right now we have that short dollar bias, we're looking for where the dollar could strengthen, but that's not happening right now. The dollar, to show us that it is in a period of strengthening, right? It's going to need to break this 96.40 level. It's going to need to take back a lot of technical damage. It's going to need to take back this broken trend line over here, as well as the prime one up here, as well as this horizontal resistance at 95.78 and 96.40. Above there, yes, then it's looking bullish. Now that's pretty far up, right? So that's quite a bit of ways. Right? We're swing traders. We're looking to make a living, to see what's going on, right in front of us. And right now, we maintain that posture of the weak dollar coming into resistance, looking for a rejection of that resistance to reestablish positions. However, at the same time, we're very aware of where we might see, because this pattern is playing out perfectly right now. It is playing out exactly as illustrated here. This pattern is playing out exactly as illustrated here. This is from stockcharts.com. And if we do see this pattern break out to the upside, right, at that point, you're also going to see very clearly, you're going to see at the exact same time, the true trend turn positive. And at that point, we'll be looking what happens up here into the first cloned resistance and the one above it. And we're going to be looking to sell both of those on rejections and resumptions downwards. A lot of people at this point are going to be uber bullish on the dollar. Until we break above important technical levels, there's no way we can become bullish on the dollar. We have to maintain our trade. It's easy to get a read on the market. It's difficult to stay with it. That's what really separates the pros. I'm here simply to look at the markets as unbiased as possible. Again, we all have biases, right? We all do our research. What an amazing time that I'm able to go ahead and watch experts from both sides go ahead and have a conversation, and then I'm able to go ahead and take what I want from each to be able to make up my own mind. What a time. This is absolutely, I'm so grateful for it. I'm so grateful for it. But my job is simply to help analyze. My job is simply to analyze the markets. For whatever reason, I have this gift here of being able to look at the markets, to look at the charts in front of me, to take something so complicated, to simplify it down and keep myself on the right side of the market. I love sharing that with you. I love participating in this online community. I am grateful for it. I hope that this gives you just a balanced, calm perspective of where we are right now. That's what's important. Always look for the other side of your trade. Always look for where you're wrong. Always look for where it's time to get out. But don't look to call the bottom. Don't look to call the top. And even if you are, like I was over here, super bullish on the dollar, if the technicals tell you something different, this is a significant period of time. This is also a significant move. Maintaining your bias simply because you're trying to talk your book, that's not how traders make money. We do make money by simply having an unbiased look at the markets, watching the charts, and reacting accordingly. If you appreciated this video, hit that like button, share it with a friend, add your insights below. You all know that I value your insight. Thanks everyone for taking the time to go ahead and explore right now where we are with the dollar, where we're going possibly tomorrow, and so we could go ahead and do our best to stay on the right side of the market.